0.8%. Hong Kong today rebounding after some sharp losses yesterday. Let's get more on the markets right now and the interest we're seeing from at least some overseas investors with Stephen Nash. He's Managing Director at Financial Services firm Merriman Curran Ford, and he joins us now on set. Stephen, thank you for joining us today. You're also part of the OTCQX advisory group at Merriman, and this, just to explain this is an over-the-counter ADR exchange in the United States.
Exactly.
One of the statistics we read out earlier was that you're seeing investor interest, U.S. investor interest in Asian equities at 20-year highs. Overall
this year, and primarily the first part of the year. In the last couple months, we've seen some repatriation of capital back to the U.S., but certainly during the first part of 2008, we saw a surge in interest in non-U.S. equities. ADR trading in the U.S. was up about 85% over the first half of 07. $2.4 trillion traded in the first half of the year in ADR. So that's a massive increase over 07 and a very good sign about the liquidity and overall ADR market trading in the U.S.
Yeah, now while the interest is there are various platforms or ways for investors to get involved. One through the ADR market in the U.S.,
yes,
but another way is directly through the markets here in Asia.
Correct.
And one of the reasons why we're seeing Asia down so much for the year is that as foreign investors pull out of what they consider to be higher risk emerging markets and pull their money back home, that exacerbates the falls that we see out here in Asia. So is it really a good thing for Asian equities, I mean for investors or markets in Asia, if this ADR market in the U.S. continues to expand so much?
I think that it's an excellent thing, and here's why. About 41% of institutionally managed capital globally is managed out of the U.S. So that is a key focal point for institutional interest. The largest retail market in the world is still the U.S. market. So what companies can do is really take advantage of that opportunity by establishing an ADR program now when markets are down. Attract companies, even if money's not being put to work, attract institutional interest through an ADR mechanism, because that gives a company in Asia the ability to trade in more hours during the day, be visible to U.S. fund managers that can pay attention to their press releases, pay attention to what they're doing in Asia, even though they don't have a physical presence in the U.S. So it can be a very effective way for companies to garner significantly more interest from the U.S. market.
What kind of interest, what type of companies tend to attract the most interest right now from U.S. investors? And I guess I'm referring mostly to the institutions. Are they looking for your big blue chip names, or are they looking for growth companies? I mean, give me a sense.
I would say more evenly split between blue chip names that are very much on sale right now, trading at low PEs, the lowest PEs they've traded at in some time. So there's a shopping spree right now, especially with the U.S. dollar strengthening. Blue chip companies in Asia are significantly on sale. So I would imagine that those are going to be very attractive as well as some of the growth names that you alluded to.
Okay, we're going to get back to you in just a moment and talk more about this in just a quick moment here. Stephen Nash from Merriman Curran Ford joining us back right after this short break. Stay with us.
CNBC Asia Business Leaders Awards welcome you with an open heart at Bangkok, Thailand. The Thailand Convention and Exhibition Bureau extends their warm welcome to all delegates who will be gracing this inaugural event right in the dynamic city of Bangkok. Look for special privileges at abla.cnbc.com.
Investing can be a challenge with many questions. At OSK, our research team can help turn your questions into answers so that you can invest with clarity. Let our expertise work for you. OSK Investment Bank.
The Leaders with Gene Stevens.
We're not in this to have fun. That is not why we're here. It's not what business is all about. But when you have that trust and you have that good camaraderie with each other, then you're better able to serve clients at the highest level. Work is one thing and accomplishing is one thing, but life is bigger than that. I think you have to manage life just like you manage any other project.
The Leaders with Gene Stevens, Sunday on CNBC Live. Get the news first.
First on CNBC interview.
Investment into China and investment into the Beijing event has already paid back.
We are not exposed to oil prices at all.
First on CNBC interview.
Well, we're the #1 market share leader in almost every segment and every market we serve.
It was a record quarter for Intel. It was our 4th consecutive quarter of record revenue.
We just want to keep a little bit more cash in the company.
Only on CNBC. First in business worldwide. The stakes.
We're up 2,600 points.
The pressure.
A good move higher in the stock market.
The adrenaline rush.
The credit markets are going through a metamorphosis.
We got a build of 1.9 million barrels.
When the big deals rock the business world.
$5 billion investment deal buying up a 9.5% stake.
We've got them covered.
There's something big about to occur in the next 24 hours.
CNBC. First in business worldwide.
You are looking at a live shot of the Tokyo skyline right now. Trading is just getting underway for the afternoon session. We'll have the opening numbers for you coming up. But first, here are your headlines right now. Asian markets are rallying in morning trade after Wall Street ends 3 days of losses, with the Dow climbing more than 550 points. G20 leaders are converging on Washington for this weekend's Leaders Summit aimed at tackling the financial crisis. Already, though, some say not to expect any major results. And a weaker won takes its toll on Korean airlines today. South Korea's biggest carrier posted second consecutive quarterly loss because of rising costs. Shanghai just closed for the lunch break. For a second day in a row, we're seeing China equities rally. The composite here up by 1.2%. As for the other Asian markets today, a Good Friday session. We had Wall Street's rally overnight, really helping to lift sentiment across the region. We've just got the Kospi in South Korea turning a bit softer here, now down by just 0.1%. The biggest market, though, Tokyo, now back from its lunch break in the afternoon session, still seeing the strength there, up by about 300 points off the highs, however. I want to point that out. Let's get back to Stephen Nash. He's managing director at financial services firm Merriman Curran Ford, and he joins us here on set again. Stephen, we left off talking about investor interest in the over-the-counter ADR market in the United States. And I want to ask you this. If there is increasing interest in that market, is that going to be at the expense of the Asian equity markets, which we discussed earlier? But does that show you that perhaps investors don't see much more value in Asia in the short term?
I don't think that it necessarily would indicate that we don't see much more value in Asia. I think that there's a lot of value to be garnered from Asia. And I think that you will see the U.S. recover first, and certainly traders, playing into the U.S. markets in strength, once we find what is a sustainable bottom. And I think that we hit on it, and we may test it again, but the more times we test it and the more times that we can then recover from that, that gives you a sense that we have something to build off of. And at that time, I think that we would see the U.S. lead us out of what could be recessionary environment, and then Asia would follow suit. But what we're seeing now is that now is a really important time for Asian companies to be visible to U.S. institutions. There is a tremendous amount of cash on the sidelines. 60% in some cases funds have in cash. Now, fund managers are meeting with companies at this moment. They're creating their shortlist of companies that they want to own up on the back of a recovering environment. So that's really what we're talking with companies about now, is establish an ADR program, set up a physical presence, get out in front of institutions in the U.S., tell them why your company is undervalued, and use the ADR market and the OTCQX market to do that.
Are you seeing more interest then from the company side, from the overseas companies wanting to list on the ADR market? I mean, what's the advantage in doing so versus just attracting investors to your home market?
So you have a physical presence in the U.S. market, and you have the ability for U.S. investors that cannot or are unwilling to buy in Asia to buy because you have a U.S. ticker that can be traded during U.S. market hours. You have a stock that settles in U.S. dollars and is held in a U.S. brokerage account. So all of those are very attractive. And whereas in the past companies had the only option really list on NASDAQ or the New York Stock Exchange, spend $2.5 million a year on Sarbanes-Oxley and other regulatory compliance costs to get onto a liquid market. Well, with the surge in liquidity in the U.S. on the ADR market, you can get the benefit of a traditional exchange listing by listing on the OTCQX.
But you're not subject to Sarbanes-Oxley? How is that possible?
You're not subject to Sarbanes-Oxley or SEC registration because you list under a foreign private issuer exemption from registration. And just recently, in August, the SEC made that exemption automatic to foreign companies that report in English on a qualified exchange. So they've made it a lot easier to come to the U.S., have a vehicle to trade there, and then garner institutional interest.
Okay, so let me just kind of summarize and be clear here. These are only for companies that have a home listing and do a secondary listing in the United States, then?
That's correct. You must have a primary listing on one of 42 qualified worldwide exchanges, Singapore, the Hang Seng, Tokyo, the ASX, all qualified exchanges.
Okay. Stephen, thank you so much for joining us today and sharing with us an interesting level there of the U.S. equity market.
Thank you for having me.
Stephen Nash, Managing Director at financial services firm Merriman Curran Ford, joining us here on set. Meantime, our reporters have been patiently waiting and standing by with their reports on what's happening in the Asian markets. Let's kick things off right now with Adam Bakhtir. Hey, Adam.
Hey, Mara. Well, that was an interesting discussion. Maybe some of the Japanese companies, or more of them, should list ADRs in the New York market to sort of gain more liquidity. Anyway, let's talk about the Japanese equity market. Just back from the lunch break. Losing a bit of the juice from this morning. The Nikkei 225 is now up by 270 points with better 3.33%. Basically, it's all the movements in the currency markets, and we've certainly seen wild volatility within the currency markets, not just in the equity markets, that are dictating the move overall for most of the exporter stocks in Japan today. We've seen huge 200 basis point swings in the yen versus the US dollar. Overall, though, the exporter stocks, particularly the technology ones, are having a great day, largely because the NASDAQ was up about 6.5% overnight, and that's helping to boost all the stocks you can see on your screen here. Nintendo, the big performer, though, up by 5.6%, and whilst, of course, the storm clouds are gathering over the U.S. consumer, the U.S. economy, and